You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. It is July 8th, 2020. Thank you for joining us. It is a beautiful day, at least in my neck of the woods. We're out here in cottage country having a bit of a getaway as a family, and it has been a beautiful time. And I haven't showered in 36 hours. It feels like that show. What's it called? Oh, yes. Naked and Afraid. I'm just kidding. It's not quite the same because I'm not really that afraid. And you know what? Those guys are allowed to bring one helpful item. And so I chose my item. This is what I brought, guys. Yes, that's right. We are doing our 100th podcast. So I thought I'd bring something to get this party started. So there you are, having our celebration. Thank you for making our channel wonderful. And today is a wonderful day if you're joining us for the first time, because we're going to go through Treb stats, and there is a ton of news articles flying past you on your news feed. Well, we go through each of them. We break down the most important parts. So today we're going to talk about, is the market fully rebounded in Toronto? And just to level out the playing field, we're then going to get into what warning signs still exist in our market. And if nothing else, even this last point, all three today, by the way, are incredible. We are action-packed. It is an action-packed show we have here on Naked and Afraid today. Will the rental eviction ban end sooner than you think? And I think yes. I think you're going to be surprised. So there is some wonderful stuff going on. We are now #1 on iTunes, Spotify, and Google Podcasts for Toronto real estate. And we're having some fun jumping into the latest news. And these are wonderful days that require a bit of extra legwork in order to pull together all the info out there. But the #1 article, the first thing that pops up when you look up Toronto real estate, is this article from BlogTO. So it's a great place to start, called "Toronto's Real Estate Market is Rebounding Fast as Pandemic Restrictions Lift." You're going to learn a lot today because we're going to dissect what is going on, what everybody is saying, and what are some of the big things we need to be paying attention to. So the article begins, home sales are surging in Toronto once again this summer after a brief yet steep drop due to COVID-19. And prices are following suit despite holding steady. And then it says in bracket, if not increasing in most parts of the city amid the pandemic. So what we've got on Tuesday, and I know I didn't publish on Tuesday, which was yesterday, but here we are playing a little bit of catch up. Treb released their Market Watch report, which we always expect to come pretty much by the second week. We always have it of the following month. So GTA realtors made 8,700 residential sales in June. So that is, listen to these numbers, guys, 89% jump from the previous month's figure. It was funny because last month we had an increase that was quite substantial as well. I think it was like 50 or 60%. And everyone was like, not that big a deal. Meh, whatever. You know, we haven't fully caught up. Guys, should that not have been a red flag? We've been waving this dinky little red flag like, come save us. We can't make it the full, 21 days on Naked and Afraid? I don't know. I don't watch that show. I don't watch TV. I don't got time for that. So here's a highlight. This result represented a very substantial increase over the May sales, which was an actual 89%. But also, this was interesting, and this goes to show you what kind of market we're in. They did a seasonally adjusted increase of 84%. So still impressive. And what I love about that is often it's very difficult because we're in June, July, and this is our spring market for this year. We really miss spring. So why I like they did that is they're comparing us, because we got to keep in mind the seasons. And so I don't know how they did that, but I'm so thankful they did, because it shows it's still quite substantial. Even seasonally, we still saw an 84% increase, which was only down 1.4% compared to June of 2019. So we have almost completely rebounded as it relates to the number of sales, which is an amazing journey. A hero's journey as it relates to Toronto real estate that we've been tracking and have pretty much called for the last several months. But now you have it. Now what? Where do we go from here? Considering the sales were down 53% year over year and 69% in April, That's not quite that bad, right? That we've pretty much fully rebounded. Last month, we had a 60% rebound, but it wasn't good enough. You guys remember we were talking about this. So you're listening now. Maybe I have your attention now. It's too bad, right? Like, it's too bad. When you got these buying opportunities, people miss out. Now, is today a buying opportunity? We will see. We'll get there. Slow down. We will get there. But of course, they weren't the same for every type of housing. And what I find really fascinating, because I just recently prepared my stats for June, and that's going to be releasing in video format today and on podcast tomorrow, we broke down each segment and they missed the big one, which was townhomes. Like, they didn't even talk about townhomes in this article. But anyways, here's what they got. They said detached and townhome sales. Sorry, not townhomes. I said townhomes. Why am I saying townhomes? Condos. Townhomes did fine. Detached, semis, townhomes. You guys are good. Condos, not so good. And this article doesn't talk about condos. So here's what they do say. So detached are up 10.4%. Townhomes are up 7.8% respectively in the 905. Home prices are up across the board. Again, not necessarily for condos. We'll get there. Year over year maybe, but not truly if we consider where they were. The average selling price for all home types combined was up 11.9%. The actual and seasonally adjusted average selling price was also up substantially from May 2020 by 7.8% and 9.8% respectively. So we have increases monthly, we got increases quarterly, we got increases annually. What else do you want? But again, no mention of condos. No mention of condos, at least not in this article. Definitely selling a good story as it relates to prices in this article and in many of the articles I'm seeing, actually. If we were to track, I love not just what news is saying, but I love kind of framing our thoughts around what they're saying and is there a common theme? The common theme in the top articles that have come out, if I were to kind of paint in broad strokes, is very good market, solid market, strong rebounds in sales and increases in price. But if you go slightly down the list, some of the less glamorous articles, they paint the picture of not such a good market, big risks coming, watch out, and we'll get there in just a second. But the headlines, the top stories, is an overperformance of an overshoot of expectations in our marketplace, which is important to note. We have a lot of optimism right now. Very important as an investor, we know that. And so then they've got here that the persistent lack of listing inventory in the GTA understandably took a back seat to COVID issues and supply, but short term, but supply should once again be top of mind. That should have been the issue all the way through, was supply, right? And unfortunately, COVID became the story, the number of sales dropping the moment months of inventory stabilized. Our tune here on Toronto's #1 real estate podcast changed, but the overall tune never really recognized affordability or supply as the primary issue. They were still kind of caught up in the fact that we had lost a large number of sales. But now that we're blowing past the 2019 stats, what comes next, right? We've got 28% fewer active listings right now, based on this article and based on some of the others I've seen. So I am reluctant, personally, to say that we're going to see a stop, this increasing price, increase in activity stop between now until August. So July and August, I think you're going to have a really strong couple months. But again, no mentions of condos. If you want to know what happens with condos, by the way, you're not going to find it in the major media. You're going to want to check out the video that we're going to unlock for you today. Make sure you tune into that. Okay, so this article continues. Growth in new listings will need to outstrip growth in sales for a number of months before active listings approach last year's levels, Treb says. So here's some irony for you. If you just listened to our last podcast, if you didn't go back and check it out, the whole premise, the major theme of that was Treb giving its policy recommendations to, municipality, the province, and the country. And that was very different in what they're saying than what we're seeing now. Listen to this. So talking about Treb, the organization's chief executive, John DeMichael, however you said it, believes it will be important to closely monitor such conditions as the COVID-19 recovery progresses. So this is what he said. Policymakers should proceed cautiously with any demand-side stimulus. Is that not what I said 2 days ago? That is in direct opposition to the policy suggestions or recommendations that have come from TREB. Can I read for you what they've recommended? Okay, again, this is just a highlight of what we talked about 2 days ago. So, oh man, drives me nuts. Listen to the recommendations. You tell me, is this dealing with supply or is this dealing with demand? First, for the city, they want a municipal land transfer tax and property tax to be deferred, right? And streamlining of zoning approval. So the zoning thing, yes, that is supply. Okay, that might be the only thing supply in this entire list. but deferral of municipal land transfer tax and property tax, that is demand, right? Land transfer tax deferral on the provincial level and first-time buyer rebates, right? Adjustments of tax brackets, right? Like, and having things not be hot. So they want to be able to make it equivalent. If you're going to give money back to first-time home buyers, make sure it lines up with the property tax. Again, demand. Federal government extending a 30-year amortization, that's demand. RRSP homebuyer plan, allowing them to have increased withdrawal amounts or borrow from cross generations, demand. So how can you just days ago tell us these are all the things we're putting forward to these various levels of government to help boost and save our real estate market, and they're all demand driven with a very, very few supply driven ideas. And then 2 days later, the stats come out that show what we've been saying all along, that supply is tight. And then going in back on what you said and say, we don't really need to worry about demand. We need to focus on supply. Well, should the things that you're suggesting not line up with what you're saying? It drives me absolutely bonker. What a convenient flip-flop, right? When it comes to predicting first-time home buyers and they're like, I can't afford it. What do we do? Oh yeah, no, we're aiming and we're pitching for you to make things easier to buy a property. But then you see stats like this where there's obviously issues on the supply side. And all of a sudden you make broad statements about how you're trying to deal with supply when you didn't really give tangible suggestions on that other than zoning and, the things to try and fast track development. So the solutions that they have are mostly demand resolving or demand boosting, which actually increases the issue with supply, right? We have further tightening of supply. So we are stuck between a rock and a hard place when it relates to supply. And so all I'm going to do is have my little celebration over here all by my lonesome. It's crazy. It's crazy out here. We have ourselves quite the issue. Is there going to come a time where we got to open up the greenbelt? Like, is that going to have to happen at this rate? Maybe, right? Like, we really don't leave ourselves any choice unless we can get a handle on what's been going on. So I saw another article here. Those are a lot of the highlights from I think there's actually in that you just got 3 articles in that one little update. But I saw we want to bring the human element to the forefront. So I saw an article from CTV News. Toronto couple with $1.1 million budget looking to buy a home for a year. This story jumped out right in my face because the gentleman in this article actually look so much like clients that I just helped in the exact same situation. Their story lines up the same. Listen to this. So they would love to upgrade from a 2-bedroom condo to buy a house. They want a backyard. They want more space for pets and for growing their family. So this is what they had to say. It's been very frustrating to find our little piece of heaven because of how crazy the situation is in Toronto. The couple both have steady employment, but said that they have yet to put in an offer because many properties sell for $200,000 to $300,000. It actually said $200 to $300. I have a feeling it's thousands, hundreds of thousands of dollars, because that's what's happening, above the listed price and therefore are out of reach. This is our next step in our life and we'd like to take it, but we can't right now. This story lines up exactly with clients that I just helped purchase a property. They were pre-approved at $1.2 million and pre-COVID, there was literally nothing pushing below 1.3. So they had no chance to get in the market. Post-COVID, talking about today, once again, 1.2 is not enough, let alone 1.1. 1.2 is no longer enough. These homes have stretched themselves by hundreds of thousands of dollars, multiple offers all over the place. When was the time to buy? Well, during COVID, because those properties, they went consistently below $1.1 million. Yet everyone's like freaking out. Oh, the homes just dropped $200,000. You mean to tell me there is a discount of $200,000 to $300,000 in pricing, and here you are with a stable employment sitting on the sidelines? So do I feel sympathetic to this couple? Yes, because I know there are so many people that got caught, but it's so unfortunate that when a time like COVID happens, people didn't seize the opportunity. Get rid of that small piece of that small 2-bedroom condo, which is struggling right now, although you haven't heard it yet in the news, in the media so far. We'll get there. You haven't seen that. So you're struggling on the condo side. So now not only are you missing out on the rapid increase because of the huge discounts that were available in the low rise, but now you're caught with a product that's going to struggle in the 2-bedroom condos. I feel really bad for these guys, but your opportunity to purchase is behind us. Now we need to start planning. Where do we stand today? Because although the news has been very hot in the last couple months, we're also starting to get a lot of insight that, it's slowing down. And that's expected, right? Because when there's a deal, a noticeable deal, right, prices are going to increase faster because now everyone's like, well, the market's good. We're reopening. Things are hot. We got multiple offers, yet prices are discounted. So I want in. Now, prices in most segments are no longer discounted. So is there still going to be raging fire increases in price? Not necessarily. Not necessarily. Fun fact, Money Sense top neighborhood for Toronto is Alderwood, which is, if you don't know, on the west side of the city, just north of Long Branch. Fun fact. And W06 for you realtors out there looking for the zones. If you're looking for the best momentum, best value, most stability, right? Because value right now comes with affordability. The average price in that area, by the way, is $1.012 million. Here was another article actually from Toronto.com before we move on to the flip side, the warning signs I'm watching for. According to Dempster, one factor, Dempster was actually a realtor, impacting the market is older Toronto homeowners who had planned on moving into retirement residences this year are holding off that decision in light of recent events. Quote, this is a big part of the housing stock that we usually see come to market, Dempster said. Without this housing stock, the market is even tighter and the buyers outnumber new listings 10-1. In a normal environment would say, you know what, there's not a lot of people who downsize. We've actually seen there's going to be another several decades of people before they want to move. They want to stay in their home. But I wouldn't disagree that this is actually adding a level of impact for sure, right? Because you've got these competing interests where everyone is fighting for this type of home. Nobody's fighting right now for 1-bedrooms and 2-bedrooms. What people are fighting for is those little bungalows where grandma lives, where she wants to stay in her home. Now she can't get into a senior's home or senior residence. She's holding off on that plan. But there's young people. It's close enough to downtown, but it also has a backyard. That supply, that type of inventory is extremely tight right now. Okay. So again, as you can hear from the good news, there's no reference to condos. So let's talk about the warning signs that I see still exist in our market. There have been, if you dig deeper, if you go below, 5 articles deep into what's popping up in your newsfeed, you'll see there are a number of news outlets that are talking about some things we need to be paying attention to. Okay. And as investors, we shouldn't just look at the highlights. We've got to look at the lowlights. Toronto home prices, this is from Financial Post, soar as listings remain low, but some question how long that will last. So here are some of the highlights they got here. Toronto's real estate market appears to be roaring back to life. So they mention that. But here's a quote. If you look at where the sales growth was in June, it was in the mid to higher end of the market. Single detached homes and townhomes. When you go down the spectrum, and semis, by the way, did really good too. They kind of fall in the single detached. When you go down the spectrum, condominium sales did look quite a bit weaker in June year over year compared to houses. So here's where we start to get a real full picture, right? Because if you ignore the condos, you don't have a full picture. So the strongest price growth came from detached and semi-detached, which was respectively up 14.3% and 22%. So semis actually did really good. The housing market is to some extent floating on COVID support. Here's something to keep in mind. People who are making above $16 an hour who haven't yet lost their jobs or taken huge salary cuts, right? And the other side of it is the mortgage deferrals. According to the Bank of Canada, 14% of mortgages have been deferred. And they're saying, well, what a rush if all of a sudden you have a huge impact of supply and the number of deferred product. If all 14% of that, if the entire amount goes back on the market, that's going to be a giant influx. Now, I'm not convinced, and we'll see another article that's also not convinced that all of them are underwater. And that's come mostly from you guys as listeners. So thank you for all your comments and the open discussion we've had. Now that we have opened back up, there's a lot of pent-up demand from people who have been impacted by the recession. As we go through the end of the year to 2021, I believe, this is this same guy, this is actually BMO, an economist from BMO, that where we start seeing the longer term impacts of the pandemic show up, then maybe the pressure on the market down a little bit. So in other words, through the end of this year to 2021, the full impact, the long-term impact of COVID will make itself known in our marketplace. Is it going to be enough to outpace the lack of supply? if we happen to come through this and we don't have that big an issue, right? Like what that actually tells you is just how severe the supply crisis is. It doesn't tell you have a healthy market. It actually tells you if a successful market through COVID, if you were to think this through, doesn't paint a picture of like a healthy market. It actually paints a picture of a lack of supply. So big that even a disease with man-made emergency orders put in place to protect us against still can't affect it, which is crazy. Right? And then really all that affected it was the psychological impact that happened early on. So we'll see. We will see, but we need to be very cautious as we enter the last quarter of 2020. To some extent, if we look at it, we've seen a surge 15% in markets like, Toronto and Ottawa, where with a backdrop of CMHC calling for an 18 months decrease of 18% up and through till 2022 even to repair, it doesn't line up. It doesn't line up. So is that a later prediction or was it a failed prediction? We will see. And the housing market functions as a glacial pace compared to the stock market. So this is a good point as well, right? You can't look at what's happened in that dip that we saw in the stock market. It does parallel our housing market a little bit, but housing moves so much slower. So the losses will extend beyond what we just saw. If in fact there is an actual economic impact and the housing market is being affected, that will show itself slower than a stock that fluctuates as we've seen, right? And a lot of people would make arguments, really, stocks are overinflated anyways because it's for the same reasons. Government pumping the system with money. Okay, Better Dwelling has their 2 cents on the whole article. I find it so funny because as we've seen, if you've been tracking with us the last couple months, in a state where the property values are coming down, what TREB does is they grab on to benchmark prices. Because if you were to compare pricing, right? Like, because first things that come off is the high-end homes. Because they're like, oh, I'm not selling a discount, nor do I need to. So I'm going to take my property off the market. So the average selling price drops very quickly. So they go and say, you know what? We're going to use benchmark prices to find the actual value, the true value by housing segment. Well, how ironic is it now that TREB, now that they're starting to see the high-end homes coming back on the market and being very successful, and the low-end stuff, the condos struggling, that are overshadowed, we are now using average price again. But we flip scenes and we look at Better Dwelling, and guess what stats they use? Benchmark pricing. It is so funny. I love that. Like, oh, so funny. So what they say, listen to this. If you didn't know they were using benchmark prices, you would be scratching your head like, what are they saying? Listen to this. The increase in sales wasn't enough to stop prices from slipping lower, though. This is the second consecutive months prices have slipped since the pandemic began. Tell me that's not an opposite story. It is. And the reason is because they're using benchmark prices. And when you do compare condo to condo, there have been prices coming down. And they're saying, I haven't taken it to its full extent here on the benchmark prices because I think it's a bit of a joke, obviously. But when you look at benchmark prices, of course, we're going to see certain segments. And when we did our Toronto, the video that we're unlocking today, and that will be on podcast tomorrow, all it does is it breaks it by segment, which is really what matters anyways. And so you'll know what segment you're in and how you're doing. But I find this hilarious. And when I go through some of the reasons why they think the market is struggling, for example, listen to this one. Despite a relatively busy market, price growth is slowing very quickly. Both TREB, which was 8.17%, and the City of Toronto, which was 7.9% year-over-year increases in June, are smaller than the month before. The rate of growth is still very high, but has been dropping fast since the pandemic started. So let me get this straight. The reason our market is failing is because it's growing slower. Smaller increases, the reason, as we mentioned earlier in this podcast, is because there was such a perceived price, there's such a deal, right? Like the market is open and yet still homes are below tens of thousands what they should be. I want in. And so, of course, now that that gap has been filled almost completely, with the exception of very few segments, now all of a sudden that increase is going to shrink down because it's like, well, there's no longer a perceived. In fact, there's a level of risk that's coming, right? Then they've mentioned here, finally, we find condos. Cheaper segments like condos plummeted in value while suburban detached homes climbed to make up most of the difference, right? So condos struggled. That is a legitimate case. TREB reported 8,700 home sales in June, which is down 1.4. And what they're saying here is the City of Toronto, they were down 11.5. So when we look at the number of sales, there is many of the new home sales that are happening outside of the Toronto area. So they're saying that more sales are in the GTA relative to the city, I think what that points to isn't so much that Toronto is struggling. I think what that points to is there is a short-term lifestyle choice people are making where they want to live outside the city, and the GTA is reaping the benefit of that. Not to mention foreign investment has come down, which is a big component of downtown. I know this podcast is going for a while, guys. I hope you're learning a ton of stuff. There is so much information here. I put probably twice as much time into drafting this podcast for you than I normally do, but I hope you're getting value out of it. There's a ton of stuff and there's a ton of opportunities. We got to know what's going on. So the other thing they point to is new listings are starting to rise quickly. Despite the sudden influx of new sellers, total inventory is still lower than last year. So they shoot themselves in the foot. New listings are coming on, but then they say, but inventory is lower. So I don't see where's the issue. Like, I don't see the issue. I love to look at both sides. I want to see both sides. But when the side that's pointing to why we're in a bad spot is the arguments are so weak, how is it? I know I would rather, as a realtor, I would rather predict prices to come down because I feel like I'd get more listeners. It's a better voice. It actually sells better papers. Market's crashing. It's going down, right? But I don't see the cases. I see months of inventory coming down for all housing types with the exception of condos, right? That's what I see, guys. That is what I see. The next couple months, here's what, to summarize it. The next couple of months, I think for all housing types, with the exception of condos, you're going to see price increases. It won't be as fast, obviously, as it's been in past months, as you'd expect. But I think we need to be a little more careful. If we're going to be purchasing a property right now, you're not getting a huge deal from when you were back in March, right? And the spring market's going to come to an end very soon, which is going to bring seasonal fluctuations. So if you're buying something right now, go in with long-term in mind, and we need to be watching because there is big news coming down that people aren't even paying attention to because what they're focused on is these double-digit price increases in our market. They are missing what's right in front of them, namely rental evictions. Huge news, guys. Huge news. Nobody's even caught it. I mean, you've probably heard about the protests that were outside of Toronto's Mayor John Tory's house, right? They've got this bill 184, which is going to streamline the process of getting tenants out who haven't been paying rent, right? They have not been paying rent, and so get out of my property. But of course, the tenant voices are the loud ones, and often the loudest voices prevail. So we will see if anything happens. But currently, this bill is in its third reading, and it would go all the way retroactively to when the state of emergency was declared back in the mid-March, right? For thousands of apartment dwellers who have now been withholding their rent for months, this could mean an immediate loss of home once the state of emergency ends. It's a scary prospect, especially as reports continue to circulate of landlords threatening to evict non-paying tenants once the moratorium is lifted. What do you expect them to do? All they got is a threat. Right? You don't have anything tangible. There's nothing of substance to put in their face because you know what they'd be doing if they could? They would be serving them with eviction notices, right? All they got is threats. Of course they're threatening it. But here is what, in my opinion, is it should be at least a top 5 article for sure. Like, obviously the Trep Stats is incredible. It gets everybody caught to speed. Nothing new or surprising for us, but it's good news. This is important news. I could have put this, if there was no Trep Stats, this would be my number 1 article of the day. It's incredible. Province's state of emergency was set to expire July 15th before Premier Ford announced an extension plan. So they are today, as far as we know, they're going to be extending the thing until the 24th. But what he's planning on doing, so the legislation, which is being tabled until Wednesday, would allow the government to extend or amend some emergency orders a month at a time, with the law expiring a year after it's passed. So what's happening here is we want to be able to get out of being in a state of emergency, but be able to continue to exercise the powers of being in a state of emergency and rolling forward month over month. So ultimately, what I hear, it's our 100th podcast. What I'm hearing is that they're trying to get off the emergency orders, but obviously still be able to do these things. So why would they want to do that? Why? And could I put forward as one of the reasons, in hand with Bill 184, is we want to be able to evict, right? We want to be able to get back to normal. We want our market to be able to reopen up. Ontario's state of emergency is set to expire on the 15th, and it's expected to be pushed till the 24th to ensure there's no gap between provincial declaration and when the new bill takes effect. In other words, the new bill is going to roll out very quickly. And what I think is going to happen now is what we see popping out of a City News article. Again, should have been a top article. Here goes. Ontario's Superior Court of Justice has announced an end date for the suspension of residential evictions. My jaw hit the floor when I heard that. And why is that not everywhere? An amendment was made to the order suspending residential evictions, stating that evictions will be, quote, suspended until the end of the calendar month in which the state of emergency declared is terminated. So here, let me just spell this. Let me make a little puzzle for you. Step 1, make a bill that evicts everybody very quickly once the state of emergency, or actually whenever the evictions are allowed. Step 2, change it so the moment that you remove the state of emergency, you allow everybody to evict all the tenants. That's the moment that at the end of the month that happens, right? Are you seeing how these things are kind of fitting together? I'm seeing this picture painted right now, and I don't know. If you were just to read any one of these articles, it wouldn't be no big deal. But clearly there is an attempt being made right now to reopen, to remove the emergency orders, and making it so that we can remove the emergency, but not really be in an issue where we can actually, part of this is you'd be able to go back. You can go back to stage 1. So all of the powers of an emergency will exist, but the emergency itself will not. And that lines this up with when you'd be able to evict your tenants, which announcement was just made. It's crazy. It is crazy. It should be top news, but obviously stats matter. So if this happens this month, I think, nobody said this, but I think it's 50-50. I do think it's 50-50 that the state of emergency will end, and thereby, without people even realizing it, evictions will be allowed next month. I don't know. 50-50. I put it there. And I expect August, if that's the case, to be a bumpy ride. So the July and August stats, I think we bring it back to July. I would be very cautious, August and September. And I would be very cautious. If you got a condo and you want to dump that sucker right now, try and get it out. Get it out. We'll see. Anyways, it actually looks like I got to go. The water is, it's waving. It's waving at me. I plan to go out in this world the same way I came into it, naked and screaming. But in the meantime, I'll throw in some clothes, go on for a dip before the local police show up. I hope you guys have a wonderful time, and I will most likely not see you guys tomorrow. If you're listening to us on podcast, you'll still get some content because, I mean, let's face it, we're putting out a tremendous amount of content. Make sure you hit that subscribe button and like us. Give us a 5-star review if you haven't, if you're following us on iTunes. And I know today was a content-heavy day, but we're going to be back with some more fun soon. Take care and keep it real.